What's going on, guys? Welcome back to another video. I'm your mentor, Arkhamtrades. Today we're going to be covering the easiest ICT swing trade strategy that you can use right now in trading. And in this video, we're going to be covering a wider range worth of topics, covering a full guide to AMD as power of 3, full guide to Candlestick anatomy, and how I utilize Candlestick anatomy to my advantage, as well as we're doing a top-down analysis approach, full top-down analysis, helping you guys from top to bottom. As I'm going to break down 2 trades towards the end of this video, which made me a little over $6,000 using this exact model. So not only in this video am I going to teach you exactly what this model is, give you guys a lot of knowledge, but also I'm going to show you guys examples of me actually taking setups using this model and making money. You guys not only learn from this video, but you guys can also get the trading plan as well as the framework to hopefully do this yourselves. Before we begin, you guys may be asking, who is Arkham? Well, I'm a full-time ICT and SMT trader, trade, day trade, and scalp. So I basically know everything when it comes to ICT and SMC, and be on the lower time frames and catch lower time frame entries, but I also am aware of the higher time frames. So I can take positions on the lower time frames and hold them for swing positions. This is just another level of trading that I've been able to put myself in because I spent the last 2 years just mastering ICT and SMC and everything that comes with it. And I taught SMC to over 60,000 plus followers across all social media. This YouTube channel, on this page, the only thing you're gonna find is trading education, right? There's no Lambos, there's no Rolexes, there's nothing like that, right? You're only going to find trading education because I am a full-time trader and that's what I do for a living. And the goal here is to help you guys hopefully be in a position to where you could potentially learn trading, master train yourselves, and become full-time traders as well. I can't teach you how to buy a Lamborghini trading or make $1 million trading, but I can give you the skill set and the framework that will allow you to quit your job. As long as you take notes, continue to show up, you will see the success you're looking for. Obviously, these are the 2 trades that we took right here. This first trade was about a 20-hour long swing trade, which made us a little over $3,000. Taking our long position here, we call it out within the Discord. If you guys aren't a part of the Discord community, make sure you guys click the first link in the description and you guys can join the Discord and talk to me and my brother Spectrades for completely free. So obviously we sent this play out in the Discord community here. Essentially, in 20 hours later, price came back higher, tagging our full take profit, using the same framework that I'm about to teach you, as well as this trade right here. So after getting that long position at these lows here and selling at these highs, we're able to sell our position again here during the Asia session, reaching all the way back below these lows during CPI. So obviously a lot of you guys may be asking, you held this trade through CPI? Yes, because I understand the underlying market structure. I understand where prices underlying going to go next. So I'm confident holding through news, holding through, big, large scale events, as long as I understand the overall higher time frame bias and framework of where prices like to go next. Obviously, this wasn't overnight. It took me months to master bias on my own. But obviously, this is why I created this YouTube channel, so I can shortcut that process for you. Now, these YouTube videos, I try to shout out one of our students. So for this week, we're going to be shouting out our student DS, which this week of February, she made a little over $17,000 in just about 1 week. Made her a little over 10,000. Then this trade right here made her a little over 5,000, and this trade right here made her a little over $3,000. So ending the week off about $17,000. The university about 7 months ago, didn't really know much about trading, wasn't really profitable, but helped her get on the right track. And obviously she's found consistency like no other, right? It doesn't take 2, 3, 4, 5 years to be a profitable trader, right? The only thing that you're missing within your trading journey is a proper mentor and obviously discipline. Once you install those 2 things within your trading journey, you can see success like this within your first year or even 6 months of trading, right? It took DS only 7 months. So as long as you stay consistent and you have a proper mentor like me and my brother Spectrades, you will see success like this. So before we begin, make sure you guys have your notebooks ready to take a whole bunch of notes, and leave a like, subscribe if you're new to my channel. Now let's begin. So first we have to understand the underlying phases of how the market moves, and it moves in these 3 ranges. So the first phase will be identified as arc accumulation, right? This is where price builds liquidity on both sides of the market, right? And during this accumulation phase, smart money is actively buying or selling position. And then after that accumulation, we get our manipulation, right? The accumulation is very important because the accumulation sets us up for that manipulation move. During this area right here, smart money was actively selling positions, right? They're actively selling positions, anticipating to push the market lower, right? The goal was to push the market lower and fake out the retail traders. This was the consequence. We had this massive gap to the downside, creating what's called a manipulation, which is simply just referred to as a fake move. When I see sharp drops like this inside the marketplace, most retail traders, they'll probably anticipate this as okay, we're in a downtrend, price is going to continue going lower, right? When I see sharp drops like this, I see it as, okay, smart money is positioning themselves, so I have to position myself with them. So seeing a sharp drop like this gives me the signature that I should be looking for potential buy opportunities during this manipulation for the next phase, which obviously that next phase is the distribution. So during this area of accumulation, smart money is actively selling and selling positions, creating that manipulation. Then that manipulation creates a fake move to drop low. Once price has dropped lower here and established this low, this is where we get into our third phase, which is obviously that distribution, where smart money is now actively buying positions. As retail traders are selling, thinking that price is going to go lower, those sell orders now offsets smart money longs. We have to take into account how an order is filled. For you to sell a position, someone has to buy it from you, meaning someone has to go long. For you to buy a position, someone has to sell it to you, meaning someone else has to go short. Creating this manipulation lower, so traders are shorting their positions, anticipating the marketplace to go lower, which only creates liquidity for smart money to obviously buy their positions. And obviously we can see here, price sees this internal breaker structure to the upside, right? These consecutive up close candles, minor retracement right here for that distribution, back above that original accumulation high. So these are the three phases of how the market moves that are very important, creating that daily range. And this gets us into our next lesson. The next lesson we'll refer to as the candlestick anatomy. Candlestick anatomy is a phrase that I created for the open, high, low, close, right? The open, high, low, close, it can be a pretty complex, concept, and a lot of traders that don't really understand trading. So I created the candlestick anatomy to make the open, high, low, and close very, very simple. Meaning that every higher time frame candle is built from a lower time frame structure. So obviously it's composed of these three phases. We have the opening price right here of that higher time frame candle, and then we have the manipulation phase, would establish a low of this daily time frame. Establishing this low, we get into the third phase, which is obviously that distribution. We see this expansionary to the upside, back up into the opening price until we get into the close. So obviously these three phases are what drives a candlestick every single day, and they're very important. And how we use it is when we want to be looking for buy positions. So obviously this would be a manipulation lower. We want to be buying below the opening price of this daily candlestick. Doesn't make sense to be buying or selling at any random lows or highs inside the marketplace. We need underlying context, and this gets us into our next lesson. Right, this is where we cover points of interest, right? And the 3 points of interest that I like to use are fair value gaps, rejection blocks, as well as order blocks, right? A fair value gap is very simple. It's a 3 candlestick formation, where as you can see in this middle area from this first candle's high to this third candle's low, we create this separation. Price comes back into that gap level to find support to push higher, right? If the market is trending, it's going to respect bullish fair value gaps. If the market is going lower, it's going to support bearish fair value gaps, right? Understanding where you are in market structure is very important. Next is a rejection block, right? Not a lot of people talk about rejection blocks, but I'm actually one of the best traders when it comes to rejection blocks, and I have over an 80% win rate when it comes to trading them, and they're one of my favorite entry models. Characteristics of a rejection block would be kind of like a long wick. So as we can see here, price creates this long wick inside the marketplace. Bodies remain equal, right? These bodies are the same, but this wick is much longer than the prior wick, right? From this higher wick level to these equal bodies will obviously create this rejection block. And as you can see on this third candle right here, price comes within the opening of that rejection block, and then we saw this drop to the downside. The second rejection block would be characterized as our quadrant. So we have this long wick level right here, right? This long wick right here. And as we can see, price opens up, comes within the 25 to the 50% of that long wick. After coming into 25-50%, we see this drop to the downside. Seeing how price came into 25-50% and then we see this drop lower, I can frame my entry within this last down close candle as long as my stop loss is back up here. So whether you take your entry at this long wick level inside the quadrant, or you take the entry right here within the opening price of this rejection block, these are both solid ways to trade them. And obviously this also would be a rejection block right here, which is the quadrant. So as we can see, we have this long wick right here. What splits us up in the quadrant, and price right here on this candlestick comes into 50% to find resistance to obviously reach back lower. And then we have order blocks, right? Order blocks are very simple, right? We can see that price came higher and swept a level of liquidity, right? We had this previous high, price came higher and swept this previous high right here. After sweeping this previous high, we get a bearish engulfing candlestick, closing back below the opening price of this last up close candle. This now creates a bearish order block. We had this liquidity sweep, and then we closed back below the opening price. So once price comes back into this bearish order block, it should find resistance to push lower. As well as we do have a bearish fair value gap within this bearish order block. So obviously this would be a really good A+ setup. Points of interest that we want to capitalize on when it comes to catching that manipulation. Now we're going to put things together. There's two ways that you can trade this. You can catch the manipulation phase, which as you can see here, came higher, swept this level of liquidity, then we broke back below this last up close candle. Right, this would be that order block here, which you would anticipate to catch that manipulation back lower. You have another opportunity back down here during the London session. Price comes lower and taps into this 1 hour order block. Right, this 1 hour order block stems as our higher time frame point of interest, which as you can see, our higher time frame point of interest would be the daily, 4 hour, 1 hour, right, or a liquidity sweep. This 1 hour higher time frame point of interest is a level of support inside of the marketplace. You don't want to immediately take the long as price taps into this level. You want to see price tap into this level and give you additional entry confirmations. So after tapping into this 1 hour order block here, we get this rejection higher. This then creates a rejection block. So in my case scenario, I would take my setup within the 25% here of this long wick. Like we mentioned, the long wicks right here. We would split this up into quadrants, 25, 50, 75%. I would take my entry within this rejection block here. But let's just say you weren't at that level of right precision or advanced within smart money concepts. That's totally fine. What you would do here is after price had tapped into this order block level, and then we got this breaker structure to the upside, right? This fair value gap right here would qualify as your entry, right? We tapped into a higher time frame point of interest, right? From our daily, 4 hour, 1 hour. And then we got this break higher. Price creating these consecutive bullish engulfing candlesticks is signaling that price had found support at this level. So obviously we can trust that price is not going to come back below this low because smart money has already positioned themselves. Why would smart money position themselves long at these lows only for the market to come back lower and take them out, right? These are people, right, that truly run the markets and understand the algorithm. So obviously, once they've already positioned themselves at these lows, where's price going to go? They're going to go back higher. So obviously, if you missed the entry down here, you can take your re-entry right here within this fair value gap range, reaching back above higher prices. If you miss this first fair value gap, price comes back lower and gives you a re-entry right here within this fair value gap order block level right here. And then you can take the long here, reaching back above the original accumulation highs. And if you guys want access to today's PDF as well as trading plan, marking out the Asia session time zones, London and New York session time zones, and every instruction that you need to trade this model, I will be putting it inside of the PDF section within the Discord community. If you guys do want to join the Discord community, it's the first link in the description. So all you have to do, click the first link, join for completely free, scroll all the way down here past the free courses, the free ebooks, the train journal, and then come down to the PDF section and you can grab your copy. And if you guys do want to live trade with me and my brother Spec Trades every single morning, plus access to 100+ hours worth of additional lessons and education found nowhere else, that's also going to be the first link in the description. Now that we're on the chart, I'm going to break down the 2 swing trades that I showed you guys in the beginning that made me a little over $6,000. Comes to framing and overall bias, I like to keep the day time frames next to me. So right here on this green candle is my prior daily candle. And from this prior daily candle, I like to mark out the previous day highs as well as my previous daily lows. From the prior day, we can see we had an overall expansion to the upside. Seeing an expansion like this to the upside, this would yield us that price is most likely in bullish market conditions. For every expansion inside the marketplace, price has to create some type of retracement before continuing back higher. My overall narrative for this day would to see a potential retracement for a continuation back higher. And obviously we have these prior daily highs as a level of liquidity. The daily candle is very simple. It's simply just identifying where you are within the next day and utilizing the prior day as a frame of reference, as well as we can utilize what has the prior day done. On the 1 hour time frame, we can see here that we've came down into this order block level. Here price creates these consecutive last down close candle. High of this last down close candle right here to the low right here, this creates our bullish order block. And as we can see, price comes down into that level to find support to push higher, obviously breaking structure to the upside. What does this tell us within market structure? This tells us that most likely smart money has positioned themselves at these lows to expand the market higher. Right? This candle right here pushed higher for over 50 points in a matter of 1 hour. Retail traders are not pushing the markets that quickly. There is smart money institutions, smart money buys in this same candle position, big money backing behind this area. So obviously price is not going to break back below this low. Instead, I would anticipate a retracement for a potential continuation back higher. So just keeping things very, very simple. It's identifying where have we been from the prior day and where are we currently at, and understanding where are we in current market structure. Price had tapped into a higher time frame level of support, this order block level. We then saw this breaker structure to the upside, anticipating the manipulation of this next day to open up, come lower to find support to push higher. You can see we are below that opening price of the daily candle. And for my trade right here, I took it at this rejection block. So as we can see, we have these equal bodies right here. This has a lower wick. Entry right around 9 p.m. So during the Asia session, putting my stop loss just back below this low right here. So this was my exact entry right here within this rejection block, reaching back above these previous day highs for over a 2-to-1 arc. If you guys are taking your trades, make sure that you have a wide enough stop loss, especially when it comes to swing trading, because price could potentially come lower and took out this previous low for a turtle soup before going back higher. So I made sure that if I was going to have a viable stop loss, it would be back below this original low, just in case. And then obviously, let's say price comes lower, find support to push higher, then obviously I could potentially scale into my position, and then I could adjust my stop loss back below this original low. First position that you put on should be low risk, but obviously have a wider stop loss. And as you gain that confirmation, you could potentially add to your trades. Now let's see how this plays out. We can see price comes lower, took out this level of liquidity right here. Like I mentioned, this could have been a potential turtle soup because this was a level of liquidity, right? So obviously price comes lower, creates that turtle soup before creating this push higher, right? We're obviously on the 1 hour time frame, right? Most of my analysis and my entries are done on the 1 hour time frame when it comes to swing trading, right? This is like the hallmark time frame when it comes to, swing trading. ICT concepts, it's one of the best. But in this case scenario, let's say you didn't take your setup down here at this rejection block like I did, creates this fair value gap right here. In this case scenario, unfortunately, around this time I was at the gym, so I wasn't really paying attention to this trade. I can't just set and forget it. That's the beauty of swing trading. If I was, aware of this fair value gap, what I would do here is I would adjust my stop loss back below this low, and I would position myself again inside of this fair value gap level. This is what's called scaling. Identify a clear momentum inside the marketplace, which is in this case scenario higher prices. I would add to my win position, maximizing on my overall reward, because I already got confirmation that price is going to go higher based off of this liquidity sweep followed by this breaker structure. So if I can add to my win position right here, this would make me a lot more money. But unfortunately, this trade right here, I just took one entry, just keeping things very simple. And this one trade right here made me a little over $3,000, reaching back above those highs. This gets us into our next entry here. So as we can see here on the 1 hour time frame, the market kind of closes around this level and it reopens up here at 6 p.m. Price came back up into this liquidity pool. It actually tagged into this fair value gap, tagged this bearish fair value gap up here. Price came back into the opening of this bearish fair value gap, and then we saw this overall drop to the downside. Like I mentioned, the market is a series of expansions and corrections. We've seen this expansion higher, prices at a level of resistance at these highs. Now my framework is to catch the manipulation move, right? This trade right here was the distribution. Price came lower to create a manipulation, and we were able to catch the longs, reaching back above higher prices, right? That was the distribution move. Now that we've seen this distribution back higher, price has now came into a level of resistance. Now what I want to do here is I want to frame a short at around this level to frame the manipulation move back low. Have this original low here as a level of liquidity, and then we potentially have these lower levels right here if price were to come down there. Around this area at around 1 a.m. I was able to frame my short setup right here, and I had my stop loss just back above this original high. I did note that the next day CPI was going to happen. So if CPI did happen and see a spike higher, it would simply just come back into its fair value gap. Made sure that I had a wide enough stop loss just in case CPI did come higher, it wouldn't stop me out. Bringing just back below these lower prices for a 2 to 1 arm, keeping things very simple. We had this original expansion to the upside. We came into a resistance where price wasn't going to continue going higher. And now we're going to take this short here, anticipating that manipulation back lower. See how this plays out. And as you can see right here, CPI comes out and we see this massive break to the downside, coming all the way back down into where? Coming back down into this rejection block down here. Came down into 50% to then ultimately find support to push higher. And these are the two trades that I took, which made me a little over $3,000 on both of these trades, making me a little over $6,000 using the exact same framework that I just taught you. As well as if you guys do want access to today's PDF plus a free course, you guys can just click the first in the description and join the Spark Trading community for complete free. And if you guys want to be mentored by me and my brother Spec Trades and hold your hand until you're consistently profitable, you guys can also click the second link in the description and join the Spark Trading University. Make sure you guys click that like, subscribe, and comment what you guys want to see next. I'm your mentor, Arkhamtrades. Be safe.